Hello everybody, welcome back to Trading with CJ. Now today I'm going to go through 3 different stocks that I'm currently buying / own and will definitely be buying more of as well over the coming weeks. Now there are so many different stocks that I'm interested in and buying. However, to put them all into just one video, that will take quite a while. So let's see how this one gets on, and if it's something that you're interested in, then I might actually make one of my stock portfolios public and you can see what I'm buying, holding, selling, etc. over the coming weeks. So if that's something that you're interested in, please hit the like and subscribe button below. Now, just in case you haven't already checked it out, I recently made a how to invest £100 video and started a portfolio of just £100. Check that out in the link in the description below. Now, let's get into it. So the first stock up has a market cap of £1.7 billion and it's the largest UK bakery chain. That stock is Greggs. Now, at the moment, all of their stores are closed. However, they are in talks of reopening up very soon once they can figure out a safe way of doing so. Now, I actually hold a very small amount in Greggs. However, I will definitely be looking to add to that position over the coming weeks. So let's jump into the stock. So they are currently trading at £17. And in the last 3 months, which was around here, that is a 30% drop. And you can see their 52-week high was actually £25.50, which was actually in January, so just moments before they all got closed pretty much. £25.50 back in January. So if we look at this graph here, this is a 3-year graph. So you can see steady, nice growth throughout the last 3 years. Simply Wall Street have undervalued the company at 37%. Their fair value should be £27, however their current price is trading at £17. So you're pretty much getting that stock right here at a bargain price. Now, a rare thing about this company is, for such a growing company as well, that are constantly reinvesting and just been growing over the years, they have a very good balance sheet. They have 0 long-term debt on their balance sheet, and they actually hold £91 million worth of cash, which is a huge amount. So if we look here as well of their future return on equity, you can see that in the next 3 years, it is forecast to be 24.7%, compared to the industry of just 9.2%, which is massive. So in 3 years' time, your money should be worth 24% higher, which is a lot. Now I can see this company having massive potential, and in potentially 2 to 4 years' time, this share price could even be worth £30 per share. Another really encouraging aspect to this is, if you look here at their insider trading, in the last 0 to 3 months, £252,000 worth of shares have been bought from insiders of the company, and that is actually the CEO that's been buying those shares. So that's quite encouraging to see that they have faith in their own company. Now, as we know, they've obviously brought out their vegan sausage rolls last year and their steak bake and stuff like that. So they are constantly trying to move with the times, and this will just help them to increase their revenue and growth over the coming years. And as I say, I personally own a very small portion of Greggs at the moment, but this is a company that I'll definitely be looking to add to. Now, my second stock on this list is also in the food industry, and that is the largest restaurant chain in the world, which is McDonald's. Now, I don't think I need to go into too much detail on what McDonald's is. However, it is not only a restaurant chain. They own over $30 billion worth of real estate. So let's look at their current share price. So they are currently trading at around $184. And you can see here, this is the last 3 months around this section here, and that's where the crash happened. And now they're currently down 15% from that period of time. This whole graph is the last year. So you can see they were pretty consistent. The crash happened and then they've dropped. Now, Simply Wall Street actually have this company as overvalued. You can see their fair value is $153, but they're currently trading at $184. But when you take into account that the majority of their restaurants are closed and not making any money, I actually think that this is still a pretty good price. And in years to come, this company could be worth around $250 plus in just a few years' time. So the valuation on this one doesn't really bother me too much. Now, whilst McDonald's debt is quite high, Not all debt is bad, especially when you have growth companies that are reinvesting that and using their debt to grow the company. You can see they do have $5.4 billion worth of cash though. Now, another great thing about McDonald's is they are a dividend paying company. They currently pay 2.71% dividend, which works out as about $5 per share. That has also been increasing over the past 10 years. Now, for me personally, McDonald's is a company that is always trying to innovate, come up with new ideas. We've seen their healthier options come into play over the coming years. Their veggie burger, vegan menu will probably be a new thing that will come out. They're always moving with the times. For me, I was actually fortunate enough to get in at McDonald's at $170 per share, but still at $184, I still think that's a solid buy, and it's a company that I will be looking to hold on to more long term. Now, my third and final stock on this list is my most speculative one, and that is Southwest Airlines, ticker symbol LUV. Now, all of the airlines have been hit over the past few months, and that is no exception for Southwest Airlines. So we can see that Southwest Airlines are currently trading at around $29.50 per share. And only 3 months ago, they was around 58, which was their 52-week high. 58.83 was actually the Pacific high. And that was only in February, moments before the global pandemic hit. So they are actually down 49% from the last 3 months. Now, Simply Wall Street has these undervalued at 45%, which is massive. Current price $28, fair value $52.5. So why Southwest Airlines over other airlines? Well, if we look at their balance sheet, now they currently have a debt to asset ratio of 62%, which in comparison to a lot of the other airlines out there, that is not that bad at all. Now, if we look at the PE ratio for Southwest Airlines, it's actually a lot higher than the rest of the industry. It's 8.4 times, whereas the industry is 6.8. Now, generally, we're looking for lower PE ratios, but in this instance, with the airline sector, I kind of like the fact that the price is actually slightly higher. It shows there is a lot more confidence in this company. People are buying more shares, therefore the price is up. It's still a very low valuation. Anything below 10 is deemed pretty low. So to still get it for 8.4, that is a good price. And as I say, there's clearly more confidence in this company as opposed to other airlines. So Southwest Airlines have been running for around 53 years. They have fairly cheap rates, and they are the US's largest domestic flight in terms of how many people are flying with them. Now that bodes very well for them, considering once lockdown gets lifted, most people from America probably aren't going to be travelling internationally. They're probably going to stick to their own country and flying between the different states. And as Southwest is the largest in terms of domestic flights, that bodes very well from them, and they're probably going to reap the rewards a lot quicker than a lot of the other companies. So I do actually own some shares of Southwest Airlines already, and it's a company that I'll be looking to add to over the coming weeks. Now, I'm aware that the airline sector isn't for everybody. It's definitely a speculative play compared to other sectors. However, if it's a company that you're interested in looking for, or a sector that you're interested in getting into, Southwest has one of the best balance sheets, and it's probably one of the safer picks in my opinion. So there we have it. That's just 3 stocks that I'm looking to add more of into my portfolio. Now, I must say that these aren't necessarily recommendations, these are just my personal picks. You should always do your own research if you're planning on investing into the stock market. So let me know if you like these stocks I've mentioned or what stocks you're buying. Also, like I said earlier in the video, I am looking at making one of my portfolios public. If that's something you're interested in, hit the like and subscribe button. Also, if you want me to do a bit more of an in-depth analysis on any of these stocks or potentially another stock, feel free to comment below. Thanks for watching, and until next time,